Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at 3 stocks that are set for some great potential growth in 2021. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are taking a look at 3 stocks that analysts all rate a strong buy and say are set for monster growth in 2021. So in today's video, we're going to take a look at these 3 companies and what is going on with them lately and what predictions analysts have for their future. Just before we jump into those, this is your friendly reminder that if you enjoyed today's video, make sure you hit that like button and leave your thoughts in the comments down below. Also, if you enjoy free stocks, don't forget to check out some of the links in our description. Right now, Webull is giving away 4 free stocks just for signing up and funding a new investment account, so make sure to check them out. All right, now let's get right into these companies, starting off with number 1, Nautilus Incorporated. They trade under the ticker NLS and are currently at $18.36 per share. Now, these guys actually started the year off as a penny stock at a low of $1.20 per share and are now up over 1,300%. And yes, analysts still think there is more room to grow. Now, the name Nautilus might not ring a bell for you, but they are the fitness manufacturers of some well-known brands like Bowflex and Schwinn. Now, it was not the pandemic that caused their share price to be down at that $1.20 mark. In fact, their price had been hovering below the $5 price point for the better part of 2019. It was actually the pandemic that helped cause the rally in this share price. As with all of the lockdowns and gyms closing, a lot of people were looking for at-home fitness solutions. And of course, products like Bowflex fit that niche. And now in Peloton fashion, they have also launched a software program. And that is the Bowflex Journey, which uses artificial intelligence to personalize workouts. And there are pre-recorded trainer sessions on their app. Now this is available for $150 a year or about $19 a month. Most of Nautilus's new machines will connect to its online platform by the end of January versus a low single-digit percentage 2 years ago, according to William Blair analyst Sharon Zakfia, who initiated coverage of Nautilus with an outperform rating back in early September when it was under $12 a share. She reckons every 100,000 subscribers will add 30 cents to yearly earnings per share, even if product investments will cause earnings to dip to $1.86 in 2021 from an estimated $2.32 a share this year. Steve Dyer, who covers Nautilus for Craig-Hallum Capital Group, calls the home fitness shift structural rather than only pandemic related, and sees Nautilus hitting $28 a share in the near term. Meeting demand will be one key. The company is adding capacity for bikes and strength machines and recently brought on a second supplier for Select Tech, a dumbbell brand with its own smartphone app. Also covering the stock is Lake Street Capital's 5-star analyst Mark Smith. And Smith is especially cognizant of the recent dip in share price, noting that the stock is now off its peak, which makes it attractive to investors. Nautilus reported blowout results for Q3 of 2020 with strength across its portfolio. We think the company has orders and backlogs to drive high sales and earnings for the next several quarters and think we've seen a fundamental shift in consumers' exercise at home behavior. We would view the recent pullback as a buying opportunity. Now, there are 4 analysts currently covering Nautilus' stock, giving it a unanimous strong buy rating. The average price target comes in at $30.25 per share for about a 65% potential upside over the next 12 months. The highest target comes from Mark Smith at $40 per share, which would be a 117% potential upside. The second stock on our list today is Electra Mechanica vehicles. Trading under the ticker SOLO, they're currently at $6.53 per share. Now, you may or may have not heard this company's name in the last year as part of this big EV craze, and that is because they are the makers of some very unique looking EV vehicles. And that is the Solo, which is a single-seat, 3-wheel EV built for the urban commuter market. Now, technically, the Solo is classed as an electric motorcycle, but it is fully enclosed with a door on either side, features a trunk, air conditioning, and a Bluetooth connection, travels up to 100 miles on a single charge at speeds up to 80 miles per hour, and the recharging time is low, less than 3 hours, and the vehicle is priced at less than $20,000. Starting in Q3 2020, the company delivered its first shipment of vehicles to the US and expanded into 6 additional US urban markets, including San Diego, California, and Scottsdale and Glendale, Arizona. Electra Mechanica has also opened 4 new storefronts in the US, 2 in Los Angeles and 1 in Scottsdale and 1 in Portland. In addition, the company has begun design and marketing work on a fleet version of the Solo to target the commercial fleet and car rental markets starting in the first half of this year. The market for EV stocks has been extraordinarily hot this year, and Electra Mechanica has benefited as interest in its single-occupant vehicles has exploded. This is still a young company with a highly growth-dependent and speculative valuation, but Electra Mechanica is also small enough that its stock could see more huge gains if marketing efforts are successful and its Solo vehicles gain traction. Now, I must admit, when I first saw the Solo car design, I somewhat laughed it off, as I did not think that this single capacity vehicle was going to really catch on in the mass markets and that we would see a ton of them going up and down the street. However, it is the points that Craig Irwin, analyst from Roth Capital, points out in this next bit that made me kind of realize the potential market for this. So Craig Irwin is impressed by Solo's possible applications to the fleet market. He writes of this opening that we believe the pandemic is a tailwind for fast food chains exploring better delivery options. Chains look to avoid third-party delivery costs and balance brand identity implications of the operator versus company-owned vehicles. So the Solo's 100-mile range, low operating cost, and STD telematics make the vehicle a good fit in our view, particularly when location data can be integrated into a chain's kitchen software. We would not be surprised if Solo made a couple announcements with major chains after customers validate plans. So when you think of the opportunity for them there as little electric delivery vehicles, I can actually see them fitting into that niche quite well. Now, there are just 3 current analyst ratings on the Solo stock, and it comes in as a strong buy with a $9.58 average price target for about a 46% potential upside. The highest rating, no surprise, is from Craig Irwin, who put a price at $12.25 for over an 87% potential upside over the next year. And third on the list is Car Auction Services Incorporated. Trading under the ticker KAR, they are at $18.39 per share. Car Auction Services is a car auctioning company which operates online and physical marketplaces to connect buyers and sellers. KAR sells to both business buyers and individual consumers, offering vehicles for a variety of uses from commercial fleets, private travel, and even the secondhand parts market. They have over 140 operating locations, and in 2019 sold nearly 3.8 million vehicles for a value of about $40 billion. And they have a wide variety of brands under their company. So in addition to just their auctioning, they have things like Backlot Cars, which is a digital dealer-to-dealer wholesale platform, Autovin, which helps with vehicle inspections, Dentology, which is in-house and mobile reconditioning, and multiple data-driven platforms as well. As the new vaccines promise to end the current pandemic later this year and the lifting of lockdown and local travel restrictions, the mid to long-term prospects for the second-hand car market and for car auctions are brightening, according to Truist analyst Stephanie Benjamin. The 5-star analyst noted, "Our estimates now assume that the volume recovery occurs in 2021 versus Q4 of 2020 under our previous estimates. Overall, we believe the 3Q results reflect that KAR is well executing on the initiatives within its control, specifically improving its cost structure and transforming to a pure digital auction model." Looking further ahead, she adds, delinquencies and defaults for auto loans and leases have increased, and we believe will serve as a meaningful volume tailwind in 2021 as repo activity resumes. Additionally, repo vehicles generally require ancillary services, which should yield higher RPU. This supply influx should also help moderate the used pricing environment and drive dealers to fill up their lots, which remain at 3 years lows from an inventory standpoint. So bad news for anyone getting their car repoed, but good news for KAR's auction services. Now, the KAR stock has 6 analyst ratings on it, and it comes in as a strong buy with 5 buy ratings and 1 hold. The average price target is $24.60 per share for about a 34% potential upside. Now, the most recent ratings are a couple months old and most vary in that mid $20 range. On the very high end, we have a $32 price target, which would be about a 74% potential upside. So there we have 3 stocks in varying industries that analysts have a positive outlook on for the 2021. I would love to hear your guys' thoughts on these 3 stocks or what other growth stocks have caught your eye lately. So make sure to leave your thoughts in the comments down below. I always love hearing from you guys. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any trading decision always needs to be made based on your own research and due diligence. If you made it all the way to the end of this video, make sure you hit that like button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day and cheers.